Welcome to Wall Street Confidential. I'm Aaron Task here with Jim Cramer. And Jim, today we have news of a strike at Harley-Davidson plant. We have a new higher minimum wage going through Congress. You've been talking about how you think employment is going to fall, and that's going to be a prelude to the Fed rate cut this year. Do the unions have too much of a say in that? Is it going to be difficult for people to lay people off
I think they're part of an archaic model. Unions don't provide the kind of protection that a Costco provides for its employees, or protection that Starbucks provides, which is that you do a good job and we will pay you above market wages. Instead, what happens to the unions is they do, we won't do a good job and you will pay us more. Now, when you have that lock-in, then there's no reason to make anything in the country. What you really want to do is just stop making things in America. And so the unions, I think, are very anti-employment. A Starbucks, which is trying to hire 90,000 people, will make up for the 90,000 people that GM and Ford have to lay off. But of course, you could say, well, hold, one's skilled, one's unskilled. I really reject that analysis. One is a tax on the system, and one is a creative force. And it ain't the unions that are creative force.
Well, the pro-union people would say, but Henry Ford's model was you want your employees to be able to afford your car.
That's Costco. That's the Costco model. It's not the auto. The auto model is this: we will pay people to the point where we go out of business. It's an anti-capital model, and it's not a pro-labor model. Because if it was a pro-labor model, it would be that's Costco. We will hire you, and you will do a good job, and we will all prosper. That's not zero sum. The way GM and Ford are set up to me are zero sum. The labor wins or capital wins. That's a very, very Marxist dichotomy. This is 2007, for heaven's sake. We've settled this a long time ago. If capital doesn't benefit, labor loses. And it's not one or the other, but the unions just don't get that, which is why they're doing a tremendous disservice to their current employees and doing a fabulous job for the legacy employees.
Right, but it does seem like that labor is on the upswing again after years of huge corporate profits.
I disagree
and
with that.
Gains.
I think that this is recidivist and very much rear guard. I think that the model is Toyota. Toyota is going to be it will be the number one automaker in this country in 5 years, maybe before then. And it's doing it with a peculiar model. And the model is you get rich working here, but we don't get bankrupted.
Right. And I know you're a big fan of Toyota, the stock, as opposed to a
Stock's
GM
got
or a
$200
Ford.
stock. Now, GM and Ford don't go down, and there's a reason why they don't go down, and that's for the same reason why Caterpillar's going up, and Ingersoll's going up, and Masco's going up, and American Standard, because we're going to cut. Now, a lot of people, remember the way I work, and I think that in Wall Street Confidential, this is a great opportunity to talk about it. The stocks tell you what will happen. If you look at the May 11 peak, okay, you did not know it was the peak unless you looked at the stocks. We were still booming. Toll Brothers was coming on air on my show saying, look, Cramer, you're just ridiculous bear. And I said, no, I'm not a ridiculous bear. I'm watching the action in Masco. And he said, and these guys, because they're not stock guys. I mean, this is the problem I have with Bill Zollers, who now I think can't, maybe now he's finally getting it, but Bill Zollers comes on my show when his stock is at 40, down from 50, and he says business is booming, and I said, what do you see in the future? He goes, acceleration. And I said, well, that's not true. And he goes, you don't know the trucking business. I said, I know nothing about the trucking business.
But I know your
about
stock
stocks.
is good. Right.
And the stocks are fabulous predictors of what's going to happen 6 months from now. It's very clear that what's going to happen is that we're going to annualize easy comparisons, and the Fed's going to cut.
So should we read much into what's going on in housing stocks today? Standard Pacific had a good number. The stocks are rallying sharply here. Or is that, again, more that the Fed's going to cut, rates are coming down?
Yeah, Fed's cutting. I mean, the vast majority of the home, but Standard Pacific and Ryland have been outliers. There is some differentiation among home builders. Standard Pacific almost went out of business last time. They seem to have a little more religion.
They got a better handle, yeah.
Ryland is annualizing very up. NVR, some of these guys are annualizing easier numbers in Washington, D.C., which was the first market to crater. But there's no uptick there in these guys, and there won't be unless we get a sense that things are better. The only non-Fed signal is that if you're trying to buy a second home and it's 100 miles away, it won't cost you a fortune to go see it.
Right, and you've written about that because gas prices have come down. People are more inclined to travel.
And again, that's anecdotal for me because I have property that I'm trying to sell that's 80 miles from New York, and it was very difficult because we had no traffic. And I think we had no traffic because it wasn't something you wanted to do, is go cruising far away for a home when you know that every time you cruise was $80. Psychologically bad.
Right.
The people who are looking are rich.
Right. So obviously, a Fed cut is a big part of your forecast for a 17%
Totally.
gain in the Dow.
I won't get my forecast will be wrong without a cut.
Okay, because the rest of the street seems to be like in that 5 to 7% growth range. Are people still not yet bullish enough in your estimation?
Totally. I think
so.
That
You're contrarian at being a bull
yeah,
here?
and plus the hedge funds are obviously thinking that not only is there going to be no rate cut, but the world's coming to an end. See, that's a combination. If the world comes to an end, I'm 2 thumbs up, way up.
Because then the Fed cuts twice, right?
Right. And I always find it funny that the hedge funds believe in something. The short hedge funds believe in something that no long believes in, which is that that everything bad has to happen. That the Fed is going to be tone deaf to an economy that's falling apart. Like here's what they do:
right.
Ford is going bankrupt. And that's horrible. And I think, oh, please give me a Ford bankruptcy, because if that happens, holy cow, will the Fed look horrible if it keeps rates at 5 change. And this is the Mexican. Now, why do I feel like this? Because I've had my head handed to me by every time I've gotten really negative in the midst of the crisis, October 7th and October 8th of 1998, detailed in my book, then I was stupid. I learned from my mistakes. And the people who are not cognizant that a crisis has produced tremendous upside are people who are not students of it, and that's okay. Maybe they wait till they get their head in until maybe they'll learn their lesson.
I know you're not naming names, and I know Doug Cass is a student of the market.
I'm a big name.
You are naming, but Doug is saying that this was a big week for the shorts to cover. That they're throwing in the towel on the negativity. He's the lone wolf out there.
I think that what's happened is that the shorts, like a lot of other people, including the longs, have become addicted to ETFs. And they somehow feel like that they're insulated from I'll short the cyclical ETF because that way if there's an upside surprise in Caterpillar, I won't be killed. Well, I mean, all they're really doing is doubling down.
Right, they're doubling their pain.
And that's okay. People have to understand that these instruments are they're like dynamite. And a lot of times what I'm seeing is not I disagree with Doug on the shorts, by the way, because if a stock's up real big the day it reports and then it drops down, that's short covering. What we're having is the stock being up big on day 1, then big on day 2, and then big on day 3. That's not covering. It doesn't take that many days to cover a cat or a Boeing. Boeing's liquid enough. It's a one day to cover. This is not like one of those short series where it's 42 days to cover. Right. Like some of the things that Altucher has come up with on that stock picker. It'll have these like days to cover situations where companies are buying back stock or individuals are buying who are there, and you need like 15 days to cover before you really get that kind of move that Doug is attributing to these things.
Okay, Jim, thanks very much.
Thank you.
I'm Aaron Task. Stay tuned for more of TheStreet.com TV.